Do you want to grow your small Forex account fast? Are you looking for a trading strategy to grow your small account? Do you make losses like all the time when trading? I know most of you need a solution to your problems, and maybe it's the reason you have clicked on this video. And so guys, try this change of character trading strategy that will unlock your profits. In this video, we will not only share unknown and crucial tips but also expose accurately how and where to enter and exit a change of character trade like a pro that will minimize your losses and maximize your profits. Let's start with the basic of understanding smart money concepts. Smart money concepts classify entry methods into two major categories: reversal and continuation. The reversal entries include the change of character and flip entry methods. In this video, we'll put all that knowledge together to establish a trading plan based on the change of character, an approach that carries a higher win rate ratio with precise entry and exit points. Let me show you step-by-step instructions to follow to implement change of character. First, conduct market structure mapping on the 4-hour time frame. Highlight unmitigated areas of interest and wait for the price to tap into the 4-hour time frame's demand or supply zone. Step 2. Shift to the 15-minute time frame to gain a clearer perspective on the price action. Look for any signs of a change of character in market behavior. If the price forms a 15-minute change of character pattern, proceed to the next step. Step 3. Zoom into the 1-minute time frame. Here in 1-minute time frame, search for any signs of a change of character. After fulfilling all the criteria, proceed to set up an entry on the 1-minute time frame. Let me explain this in detailed steps. Listen carefully. Here is an example scenario on the 4-hour time frame. Imagine we have a 4-hour structure where the price is in a downtrend and has created a series of bearish break of structures. Here, we have an unmitigated supply zone at the extreme. Let's say we have a perfect sell setup on the 4-hour time frame, confirmed by the criteria and rules of a high probability trading setup. From here, we will be monitoring the 15-minute time frame. So, switch to the 15-minute time frame, closely monitor the price movement, and patiently wait for the price to return to the 4-hour time frame supply zone and form a change of character pattern. After detecting the confirmation for market structure shift in the 15-minute time frame, now follow these steps. 1. Identify and highlight the supply zone generated by the change of character's bearish wave in the 15-minute time frame. After this, 2. Zoom into the 1-minute time frame and wait for the price to tap into the identified 15-minute time frame supply zone and get reversed, creating a new change of character on the 1-minute time frame. 3. Once the change of character is confirmed in the 1-minute time frame, identify the order block generated by change of character wave in the 1-minute time frame. 4. Place a sell limit order at the lowest point of the zone with a stop loss set a few pips above the highest point of the zone. 5. For take profit, target the unmitigated demand zone on the higher time frame, like 15 minutes or 1 hour, or the swing low of the current time frame. Now it hurts to miss entries, therefore, let me show you how you will be handling missed entries. If you miss the change of character entry or if the price action doesn't provide an opportunity due to volatility, in this scenario, taking the continuation trade becomes the safest way to enter the market. To get this: 1. Wait for the price to break the recent structure to the downside and pass through the 1-minute demand zones, creating a newly generated supply zone. 2. Avoid placing any limit order at this newly generated supply zone initially. Instead, wait for the price to form liquidity zones and sweep them before tapping into the new supply zone. 3. Once the liquidity zones are swept, set a limit order at the lowest point of the supply zone. Now, how do you know continuation trades? There are 4 essential criteria to consider before executing continuation trades. 1. The price must form a change of character pattern or flip pattern after reaching the higher time frame supply or demand zone. 2. Await a break of structure and a zone breakout in the price movement. 3. The price should leave inefficiency behind when forming a break of structure. 4. There must be static liquidity zones near the identified point of interest. To understand this, we will use the real chart example. Let's look at a real chart example with the euro to US dollar 4-hour time frame. The market's overall direction is bullish. After sweeping the sell-side liquidity accumulated below the equal lows, the price drastically pushed to the upside, breaking through the latest major high and creating a bullish break of structure with great inefficiency. After a temporary pause, the price reversed its direction to the downside, breaking below the candle's low, which represents the most recent internal pullback. This confirms the low and high as valid major structures, giving us a valid break of structure. Now, identify an order block or demand zone attributed to the recent valid BOS. As we can see, price retraced back down and entered a pullback phase, filled inefficiency left behind and reached the identified demand zone. Here, we expect price to react and reverse. Now that the price had got to our 4-hour demand level, we will zoom into the 15-minute time frame to gain a clearer view of the price action. Look for signs of a change of character pattern. Here, the market was on downtrend, but when it got to 4-hour timeframe demand zone, the price reversed heading to the upside, broke the structures and left inefficiency behind. Remember, number 1, for a change of character to be valid, price should reverse and originate from higher timeframe supply or demand zone before breaking the recent major structure and initiate the change of character. Here, we got it. Number 2, to have a high probability change of character, price must sweep static liquidity zones before tapping into the identified supply and demand zones. Here, price swept liquidity below this equal lows and then continued to sell. Number 3, to get a high probability change of character, price should break and close below or above the 2 following structures. Here, price has broken this 2 following structures as well, after the mitigation of 4-hour time frame demand level. So traders, all are to confirm a valid and a high probability change of character are met. Following the formation of the change of character pattern, in the next step, identify and highlight the demand zone generated by the change of character's bullish wave on the 15-minute time frame. Final steps on the 1-minute time frame. Switch to the 1-minute time frame and wait for the price to tap into the identified 15-minute time frame's demand zone, triggering a reversal and creating a new change of character. Price is on downtrend on 1-minute time frame because it had created several break of structures until it got to 15-minute time frame demand zone. After touching the demand zone, it reversed, creating a change of character by breaking and closing above the recent structure level. Once change of character is confirmed, identify the order block generated by change of character wave in the 1-minute time frame. Then place a buy limit order at the highest point of the zone with a stop loss set a few pips below the lowest point of the area. Target the swing high of the current time frame for take profit. In conclusion, by following these steps, you can execute entries with a well-defined risk-reward ratio. Remember to limit the number of open positions to a maximum of 3 at a time and adjust your position size accordingly. This comprehensive approach ensures that you can leverage smart money concepts effectively to enhance your trading strategy.